Hello. What I'm about to tell you can save you tens, if not hundreds of thousands of dollars in compounding interest. So if I was you, I would pay close attention. This is the continuation of the 5 secrets to success that we were discussing yesterday. And we were discussing the topic, leveraging other people's money, OPM. So that was secret number 1. Okay? 1 was OPM, other people's money. Now, I'm the author of the book called An OBS Making Millions in Real Estate. I am also the licensed real estate broker for Bellalago Brokerage Inc. in Kissimmee. And I want to discuss, and for this example, I'm going to discuss a $300,000 mortgage principal. Because I received a couple of emails and people didn't understand. So I'm going to try to elaborate a little further, make it as clear as possible. People were saying, oh, it's the same. It's not the same, and I'm going to explain what I mean by that. On a $300,000 mortgage, when I wrote the book, the interest rate was 6.5%. So I'm going to use that as an example. If you grab a $300,000 principal to amortize a 30-year loan, your mortgage payment would be $1,896, and 20 cents every month. In a year, you would have paid $22,754.45. So I want you to look at that very good, because how much you think out of $22,754 that you paid in the whole year, how much you think of that applies towards the principal? You would have paid in principal only $3,353.27. You see that? Think about this. $22,754, that's what? That's almost 4 times as much, 3, 6, 9, 12, actually more. You see that? So you only apply $3,000, so you will reduce the principal amount by only $3,353, because most of what you paid was interest. So the interest in a year that you would have paid in a whole year would have been $19,401.18. Tell me this is not outrageous. So what I want you to show you is, don't work hard for your money. Have money work hard for you. And what I mean by that, because people were claiming that it was the same, it's not the same. If you went and borrowed, for example, a credit card with 0 APR, again, 0 APR, you're not paying interest, right? For a year, 18 months. Or you could borrow from a credit card or an ELOC. For those that don't know what an ELOC is, that's a home equity line of credit. So let's say even at 10%, if you borrow $10,000 and you apply that $10,000 towards the reduction of this principal, that will give you a balance of $290,000. And now the interest rate of 6.5% will be based on the $290,000. Now, if you recall a couple of seconds ago, when you make the payment, most of what you're paying every month is what? Interest. Only a little bit goes towards the principal. So by you doing this, you drastically reduce $10,000 off of this large amount. All right? Which in reality, what happens is it would have taken you, if you look at your own mortgage statements or your amortization schedule, you will see how much of that you will reduce. Well, based on the math on this right here, you would have reduced $10,000. It will take you about 3 years. Over 3 years, you know how much you would have paid in interest in those 3 years? $57,515.07. Let me say it once again. $57,515.07. So by you applying this and doing this, you just save yourself $57,000, assuming you have a 0 APR. So even if you have an ELOC, yes, you're paying 10%. But here's what the secret is at. You're not paying 10%, you're paying 10% a year, okay? So you gotta look what is called the effective interest rate. The effective interest rate is the rate you pay per diem, per day, okay? So you just reduce $10,000. So this is what happens. Remember when I said, don't work hard for money? Have money work hard for you, okay? Well, when you get paid, for example, you and your spouse, week 1, week 2, you're getting paid, and basically your money's sitting in a bank. collecting no interest. And if you are collecting any interest, it'll be in a year 1.2, 1.5% interest, right? Meanwhile, your money's not working hard for you, but they are charging you rent every day, right? Interest. They're charging you for the use of this sum. They're charging you interest every day. So, if you borrow from an ELOC, for example, right? Instead of having the money sitting in the bank, you will pay every week. Week 1, week 2, week 3, week 4. So what you just did was you reduced the compounding interest in this year because you're able to work, make your money work harder. Okay? So now when you save money here, you're actually saving money regardless because you are now paying down the principal here. You're allowed to pay down the principal every week. So you reduce that $10,000 a lot quicker versus having it up here that will take you years and a lot of compounding interest. I hope you follow me. Okay? So you're not paying every day. They wouldn't allow you, right? They will have to wait 30 days in order to reduce the principal, right? After 30 days, then you make a mortgage payment. So they already charge you. They're not going to allow you to pay mortgage every month. But here, applying this system, at least you're paying it every week. So you're reducing, again, compounding interest. So you have your money working hard for you. I hope this makes sense. I am, once again, the author of the No BS in Making Millions in Real Estate. This is available on Amazon. Books a Million. I am smarter than what I look. Okay, so I hope just take advantage of this because this can save you a lot of money. And if you're an investor and got many properties, this will definitely save you a lot more. So, thank you for watching. Please, this is important. Please like, comment, and share. This could be saving someone definitely a lot of money in compounding interest. Thank you for watching. God bless.